The U.S. states are buying Bitcoin. Well, some of them aren't. And we're going to talk about what the opportunity cost is if your state rejects its Bitcoin Strategic Reserve Bill. I've got Storm Rund, president of the Oklahoma Bitcoin Association, and Closet Vibe Coder on today's episode. More on Bitcoin Season 2 in a moment. Bitcoin Season 2 is brought to you by Arch Network, the platform building bridgeless apps on Bitcoin. More on Arch later on the show. Let's kick it off. So it seems like everyone's launching a Bitcoin strategic reserve these days. Over half of the United States have some form of SBR, either proposed, passed, or rejected. So it's about time that we start tracking these more closely. I've got Storm Rund, president of the Bitcoin Association, Oklahoma Bitcoin Association, and co-founder of Bubble FM, a podcast discovery platform, on Bitcoin Season 2 today. Welcome to Bitcoin Season 2, Storm. Thanks for coming.
It's great to be here, Charlie. Thank you for having me.
So, Bitcoin reserves are like the consensus trade of the day. Everybody and their dog is doing them. I don't know. What's your take? It's middle of May here. We've had some pass, some fail. What is the state of the states and Bitcoin's strategic reserves?
So first thing, let's give a shout out to bitcoinlaws.io. They have a fantastic tracker for just tracking the actual state, what that legislation says, what it's going to do, and where that is in the process, in the legislative process. This can be super confusing to track, as you guys have experienced covering the SBR issue on this show, because every state has different legislative processes. They start at different times. They have different committee requirements. They all typically have a bicameral legislator with have bills originating in one house, needing to get passed, sent to the other house. But there's all sorts of little road bumps and things that a bill can face along the way, and it totally is dependent on which state it's in for the actual nuance of that. So as far as the state of these bills and sort of where we're at, we have obviously had New Hampshire pass, and then we're waiting on news for Texas. And then there's a few other states waiting in the wings that might have a last second push. We've experienced that at the state level. With our own advocacy we did last year for a sales tax exemption on electricity for Bitcoin mining, we were pretty down in the dumps on that bill going into the second week of May. And then just like that, it turned around and we got it through. So anything could happen. I think, as far as timing goes, we're wrapping up session here in Oklahoma, and we should be wrapping up session in most other states. They typically take summer off, and state legislators. So I think Texas is probably going to be the one we hear about. And then anything else beyond that would be a surprise at this point. I think like a pretty big surprise.
Yeah. So, for the listener, like they may see the tweet that bubbles up to the top of their feed that says, Arizona just passed an SBR, Bitcoin to the moon. And I'd be like, that's great. I also think Bitcoin to the moon, but not all these SBRs are created the same. There's a lot of nuance to it. I think maybe it would actually help to begin with just the basic process that, I actually think some foundational context here of how does a bill become a law, Storm? What's the typical process for one of these bills to go from idea to voted on and either passed or rejected?
What were those old cartoons?
It was like the Shirley English. Yeah. It's like the I'm a bill like jingle that I forget.
I'm just
the name.
A bill. Yeah. Sorry to listeners for the 1 second of my singing voice. So I mean, it's typically the same in state legislators as it is at the federal level. You get somebody in either the House of Representatives or the Senate to put their name on a bill. They may help write it. They may not write it at all and work with an industry group. They may just respond to favors from other representatives or senators. And they are the ones that are actually going to put their name on it, talk about it in front of their either House of Representatives or Senate, and they're going to be sort of that bill's champion through the entire process. So let's say it originates in the House of Representatives. First thing, it's going to get assigned to a committee, and it may die right there. Seriously, first step, first filter. If the chairman of the committee either really doesn't like that representative or doesn't like the bill or doesn't like maybe something else that specific author is working on, and this is their way of taking it out on them, they can pull levers and make it happen to where that bill just never gets heard in committee. So that is the first thing. It can just die immediately, never gets heard, never makes it to a vote. Nothing ever happens with it. So assuming it gets past that, it'll go to a committee, which is, a House of Representatives, Senate. They may have, probably double-digit committees depending on the state. And they'll talk about it in committee. You'll have a formal presentation of the bill. There'll be opportunities to ask questions and then debate the bill, and then they will vote. If it passes the committee, it may go to a second committee, same process. Then it will go to the floor, and then it will be voted on by the entire legislature. And then it will be sent over to the other house to do a mirror image of that exact same process, except if it starts in the House, goes to the Senate, starts in the Senate, goes to the House. So there are really actually interesting. I'm going to pause there. Are there any sort of civics questions before we talk about all the little pitfalls that can happen and all the gatekeepers that exist?
I want to go into the pitfalls because that's where the really interesting nuts and bolts are. Some of it's personal drama, some of it's weird bureaucratic obscurity. Tease this out for us.
Yeah, and I'm going to use Oklahoma and sort of our examples of things that have happened in the legislature this session because it sort of makes all this come to life. But a bill can fail for so many different reasons. And it really is a sort of idiosyncrasy of this whole committee floor leader committee structure. And that's that you have these gatekeepers at every step of the way. So for the Oklahoma Strategic Reserve Bill, to sort of jump to an endpoint here, it's the way that died is that it was voted on by one house and it passed 77-15. That you may read that or see a tweet or something and be like, wow, this thing is cooking. I mean, it's going to pass with flying colors. It had support from both houses, from both parties. We had tons of great meetings on it. Everything's well and good. So it gets out of the House. It goes to Senate committee. Well, what happens is when you get to committee, you have a gatekeeper. And it went to a very specific committee where the gatekeeper of this committee does not like Bitcoin very much. And when I say doesn't like Bitcoin very much, I specifically remember him comparing investing in Bitcoin to owning orange juice futures. That was a new one, actually. You hear tulips and Neopets and all these types of things, but not orange juice futures. Kudos to him for the originality.
Boomers are so creative in their age analogies.
Give them way more credit with that.
Yeah.
So really what happened is we actually encountered pretty significant resistance actively, not just passively, like, hey, when this comes up, I'm going to talk against it. There were closed door meetings happening, really because there was tension between one of the bill authors and then the Senate Chair Committee or the chair of that Senate committee. And there was sort of drama coming in from another issue that revolved around the energy and utility sector, nothing to do with mining. And this was sort of became a proxy fight for one of these other issues. It's sort of one of these always, if you work against one of my bills, I'm going to work against one of your bills. You better back off or I won't back off here. Oh, and I also happen to not like this issue at all or this bill. So now I'm doubly motivated to try to come after this bill. And that was sort of the dynamic we run into. So yes, if you're sitting there asking yourself, really, you can have almost 100 representatives vote in favor of a bill. express that their constituents would want this in law, and then one guy can have something killed over personal beef? Yes. The answer is absolutely 100% yes. And then, if you do get it out of committee, there's also then what's called floor leadership. So floor leadership, okay, let's say a bill then passes a House, goes in committee, gets voted through the committee, and then it is queued up for a vote in the Senate. Doesn't that mean the Senate will then vote on the bill? No. Why would you think that? Absolutely not. It's not what it means. So then it goes to floor leadership. And floor leadership gets a big stack of bills on their desk, and they say, okay, what do we want to vote on today? And then they basically make the agenda. They are then, also in a position where they potentially have bills that they're working on. And they say, you want your bill heard? Well, you happen to be standing in the way of one of my bills. So why don't you fall in line, and then we'll make sure this goes to a vote. These kind of things are very, very normal. And it is universal. It is not unique to Oklahoma. That is universal across all state legislators, and then very much up into our federal government as well. So yeah, it is not a guarantee that once a bill passes out of committee that it will actually be heard on the floor. If you actually then do get a floor vote, you've done the hard part. It is, of course, hard to get the votes for a bill to pass, but that is sort of a lot of the pitfalls that can happen when you're moving a bill through the legislature.
So this means that you have to be, you've basically got to play politics if you want to get your stuff heard. It's not simply just building consensus. This feels a lot like the Bitcoin development process.
Oh, say more.
So you've kind of described how these things do pass through some of the pitfalls, the challenges. Let's get into the actual, let's say an SBR does get passed. Not all SBRs are made the same. Some of them pull money from different sources. Where does the money come from? And is there, is one source of money better than the other? What are your thoughts on this topic?
Yeah. Real quick, just want to also acknowledge the fact, as we saw in Arizona, that if you get through all the pitfalls that we mentioned, you go to a governor's desk, and then you can have a junior staffer basically just hate your bill. And then the junior staffer has the governor's ear on this one specific issue. And then they're just, they've got 500 bills to sign that day. And they're like, okay, whatever. I don't have time to think about this. Sure. I'll listen to you, junior.
Well, and that's what we had. That's how we got the headline for Arizona governor vetoes a bill. But wait, there's more. There were multiple SBRs going through. And then so the Arizona governor then signed the other SBR, which was, I would say, a much more diminished version of.
That was like the stockpile versus reserve sort of distinction. Arizona had two vehicles that basically did that divergent path. Yeah, that makes sense. Okay, so strategic Bitcoin reserves, where does the money come from? How is it different? What are the different sources of funding? Okay. So I'll get my first sort of hang up and pet peeve about the Bitcoin reserve discussion out of the way. And first, one is that not one of these pieces of legislation mandated any funds to buy any Bitcoin. And people feel different ways about that. There are some Bitcoiners who are very active, say this doesn't do anything. Then what's even the point of this? These aren't strategic Bitcoin reserves. And they can be technically correct and yell past each other on Twitter all day. But that would never pass and there's a very specific reason. One is that would get vetoed. I mean, straight up, like the state treasurers do not like getting mandates like that from the legislator. Governors don't like doing that. They don't want to rely on the expertise of the legislator, and expertise should be in quotation marks because, again, legislators are intended to be generalists. And a lot of the state executive branch agencies are intended to be specialists in a field, especially when it comes to treasurers and then people who sit on the board of pensions as well. Really, what these bills do then is they say, okay, here is guidance. Here are the types of things that can be invested in. Let's define them. Let's set a cap. And then let's now officially say if there's 8 line items that a pension fund or a state fund can invest in, let's add a 9th line. And that 9th line is going to be Bitcoin. Great. That is a good piece of legislation. It's also much easier to pass because, for one, it won't get vetoed as easily. It can still get vetoed, as we saw in Arizona. But then also, it doesn't have what's called a fiscal impact. And a fiscal impact is like there is actually going to be state funds that shall be appropriated in order to carry out this legislation. A very concrete example of that is like a tax exemption. If you pass a tax exemption, okay, the state has to mark down their revenue. They're like, okay, we're going to have this much less revenue coming in. There's a fiscal impact. It goes to more difficult committees. It gets more scrutiny. You'll have the tax commission weighing in. You'll have a whole lot of people weighing in. Whereas if you do this other vehicle, which is where all the SBRs have gone, they're policy bills. That means they have no fiscal impact. They don't need a special report from the tax commission on how much this is going to cost the taxpayers. None of that. And we actually had a very interesting experience in Oklahoma where we ended up in one of these fiscal committees because there was a very, very arcane statute that was triggered that said, if any buys of Bitcoin happen, we will need to hire and train a new state employee to just click the button effectively. Seriously, just process, quote unquote, process the transaction. We would have to get a full-time state employee. If you ever were in doubt about the efficiency of governments, then here it is. And
we'd have to hire somebody like a whole new salary payrolled employee to their primary, the reason they're hired is to click the button.
Correct. Because it's a new asset class, all of this language in the statute that was a, square peg in a round hole. And then, therefore, it got slapped with a fiscal. And then you had all of the weigh in and the hand wringing about this bill, which was complete BS. We actually got the fiscal removed, but by that time it was too late for committee assignments. So, yeah, again, pause there. And then we can get into sort of like the differences in funding.
Let me tell you about one of the most slept on opportunities in crypto. Arch is building fast, composable DeFi apps on Bitcoin. Arch apps tap into the OG blockchain with by far the most liquidity and best brand in crypto. I've known the team for over a year. The tech they're building is solid and they are racing towards mainnet. There's dexes like Saturn, meme coins on funkybit.fun, instant loans on Cha-Ching, and so much more. Plus, they're rewarding testnet users. So join me in trying out Arch while it's still early. No, I think this is pretty good. I just keep rolling on this because, I think you're crafting a very good linear narrative here so far.
But okay, all of these, except for the Montana had a $50 million cap with a very specific, it's going to come from this one fund. And basically all of them, Oklahoma, Texas, New Hampshire, all of these bills, they defined 2 types of funds. One is funds that are managed by the treasurer, and the other are funds that are managed by the pension boards. So state pensions and treasurers. There are quite a few differences in these 2 types of funds. So again, separate out in your head. When people talk about state Bitcoin strategic reserves, they are almost always referring to treasurer funds. Because if you refer to the state of Oklahoma buying Bitcoin, they're referring to the state treasurer managed general revenue operating fund is going to own Bitcoin.
This is like taxes that I pay to the state. When I file my taxes and I pay X% to Oklahoma state taxes, those typically go to the general revenue fund.
Correct. Yeah. And then there are a couple other funds that get broken out. We have a rainy day fund, or what's called the General Constitutional Reserve. Actually, they call it the General Constitutional Reserve, otherwise known as the Rainy Day Fund. And then there's a few other funds that the treasurer directly manages that have different investment philosophies. They hold different types of investments. They perform differently. They have totally different mandates and goals. They have different benchmarks they're aiming for. So I think it would be helpful to just sort of compare and contrast these two, the treasurer managed funds and the pension funds.
Okay, so Trey, but which one's bigger, Storm? To me, it would seem like, oh yeah, well the main fund, it's probably bigger, but we already know that's not the case.
It is certainly not the case. So if you're just interested in state related entities buying as much Bitcoin as possible, you would be way more interested in pension funds. Pension funds are massive. In Oklahoma, the pension funds are holding about 4 times as much money as the state general funds that were specified in our strategic Bitcoin reserve bill. That's going to be the case for pretty much any state that you look at. I mean, truly, go look at the total assets under management for any of these state pension funds. I think some of the largest are in like California. In California, I think they have multiple pension funds that are in the hundreds of billions of dollars. These are huge asset allocators. And they, again, are very, very, very different in their investment philosophies compared to these treasurer funds. So one of the biggest pushbacks we got in Oklahoma was specifically about this state rainy day fund. To summarize some of the debate that happened in committee about this bill, we had one of the antagonists to the bill basically said, we need to be able to sell these assets and make sure that we're getting the same amount of principal we put in there for. Returns be damned. We need liquidity, and we want to be risk averse. It was actually great. Our bill author then proceeded to list off an entire bevy of bonds that the state owns that are currently underwater.
This is actually a really interesting sidebar to have.
Yeah.
Is like, there's this expectation, oh, well, the pensions are going to be conservatively positioned. They're going to return regularly, but in practice, that might not necessarily be the case.
Yeah. So you get bonds all the time that go underwater. And a lot of the ones that our author listed off were underwater to the tune of 30-40%. That's like
Bitcoin drawdown percent.
Yeah, it absolutely is. And so, it was very interesting to watch because there was a discussion about, okay, well, if we need to sell the Bitcoin, it could be underwater 30-40%. That's interesting, Senator, because actually we do own a lot of bonds that are down 30-40%. But then it became a double standard because, well, if we have to sell the Bitcoin, then we'd register a loss. Same thing with these bonds. If you had to sell them, you would register a loss. But then he countered, the antagonist countered, and he said, okay, well, if we hold the bonds to maturity, then we actually don't have a loss at all. And then it just became this sort of like, well, is this a hypothetical scenario in which we're selling the bonds, or are we not selling the bonds because we actually need them? So yeah, these sort of rainy day funds, the state treasurer funds, they almost always invest in virtually exclusively bonds. And like the types of bonds that they invest in are like T-bills, like U.S. government agency securities. Maybe they'll do some mortgage-backed securities if they're really aggressive. Certificates of deposits, repurchase agreements, and even like foreign bonds, which you'll actually find some typically further to the right representatives and senators that think that is absolutely heinous, and that is like a very obvious example of something that's like, if we're going to invest in this, then why would we not consider Bitcoin? And then the investment philosophy. So basically, they're all only concerned about safety of their principal, liquidity, and then getting a modest yield. That's really all that they're interested in. They're investing on short time horizons to be able to prepare for these scenarios in which they actually need to deploy those funds. And then that's really all they're concerned about. So they're much more risk averse. They're fine with saying we're leaving gains on the table. And that's okay as long as we're protecting our principal. To be fair, that makes sense. That is a totally valid strategy for something like a rainy day fund and a general operating fund. These aren't huge pools of capital that are being invested into the S&P 500 as they currently stand. They serve a very, very specific purpose. And again, they tend to be a lot smaller than pension funds. So their performance in Oklahoma for 22 was about 1.5%. 23 was about 2.5%. 24 was about 3.5%. Oh, look at that. As the Fed raised rates, they were making more on their bonds. Okay. Compare that to S&P. We went about negative 18% in 2022, and then about 25% respectively in 23 and 24. Missed out on gains, but you also don't have that 20% drawdown in 22 where it's like, hey, if something happens, now all of a sudden we're out 20% of our rainy day.
And then Bitcoin during that same time period was down 70%.
Yep.
Up 500%. So
yes. Which can, you get all of the portfolio allocation experts talking in Bitcoin. It's like, that can be good, especially when you have, when it's only a small part of your portfolio, which a lot of these bills specify like a 5% cap. That can be good to be non-correlative to the rest of your portfolio. Unfortunately, all this to say, a lot of senators and representatives look at funds like that and say, this isn't a place where we're trying to identify the best possible investments. And they can get stuck on that. And they can also get stuck on languages like strategic reserve. Strategic reserves are historically about building up reserves of commodities that in times of huge price pressure can be released out into the market to keep prices stable for onions or,
orange juice, maybe
oil. Yeah.
Oil. Yeah.
So there's a lot of sort of baggage that comes along with the way that we've written these strategic reserve bills and talked about them, which has been a learning experience for us at the Oklahoma Bitcoin Association, I think for the whole Bitcoin community over this session. And it's been really cool. I think we have a much, much clearer picture. So before I go into pension funds, is there anything sort of yeah?
No, I mean, maybe while we're on this topic, what do you think? I don't know if you have a better terminology, but how do you think the next iteration of these types of initiatives can frame the language better in a way that increases the likelihood of these state treasuries acquiring Bitcoin in some fashion? Do you have an opinion there?
Yeah, I do. And I think this leads straight into the pension question. And I think we need to shift our cheerleading. I think there's one side of me that is my more cypherpunk oriented Bitcoiner. That's like, I don't give a rat's ass if the state of Oklahoma, the actual state is buying Bitcoin. I don't, same thing.
Bitcoin's going to pump regardless. Somebody will buy it.
Truly. Somebody's going to buy it.
It doesn't have to be my state. Yeah.
Bitcoin does not need state governments to buy Bitcoin. I'm not worried about the performance and longevity of Bitcoin. I think that's almost just it's not something that needs to be cheerleaded. They're just going to do it eventually. And if they're late to the game, great. That's more time than if you think it's going to pump the price, then good. Price stays low, more sats for the rest of us. So I almost just see that as an inevitability, and it's not something that really needs our hand in it. And you can make the same argument for pension funds, but I actually think there's a very significant cost to delay for pension funds. When we're talking about Bitcoin as better savings, I actually do care for my community and the state that I live in, that we're providing sound retirement safety nets for the people that live around me. This is good for social cohesion. This is good for people who have spent a lifetime working as a teacher, as a firefighter, as a judge, as a police officer, and they have given a lot to our community, and we want them to have good retirement. So on one hand, I care a lot more about these people than the state general fund. I think that's way more in line with what we think of with Bitcoin is this is a low time preference investment that is supposed to make individuals' lives better. And then also at the same time, if you're interested in the bag pumping side of things, this is a way bigger pool of capital. So I think it makes way more sense for us going into next year to be really thinking about these pension funds and these massive pools of capital they're sitting on. So compared to the state funds where you have, so they're smaller, they're investing on smaller time horizons, they're pursuing a asset allocation that is much lower risk investments, even though we've already touched on how bonds can go underwater as well. They have higher benchmarks. And again, their entire investment philosophy is different. Whereas a rainy day fund, the philosophy is in the name. A pension fund, they invest on, at least in Oklahoma, on an unlimited time horizon. And that's because you're always going to have pensioners. You're always going to have these obligations that you need to pay out to people who are now receiving benefits. We have an aging population. More and more people are going to be receiving benefits. You're going to have less people paying into them. We are already seeing in Oklahoma, actually, there's a little bit of interesting history here. Oklahoma had one of the worst funded pension systems in the entire country. I think we were ranked 46th, 47th. Oklahoma residents, we love to hang out in key metrics in that 40-somethingth range. And we had, in 2011, we had pension reform. And at the time, a lot of our pension funds were about 40 to 50% funded. That's not good. That means we have about the total amount of assets we need to pay about 50% of the payments we need to. Guess who fills in the gap? The state. So now you're taking income tax, sales tax, franchise taxes, everything, and then you have to fill in those pensioner gaps. So we had reform in 2011. Oklahoma raised their funding ratios way up. I think we're actually now in the top 20 in funding for certain of our pension funds. And again, you have about 8 active pension funds in Oklahoma. And basically those ratios are good. They get retirees payments, but you have, again, this very huge elephant in the room. That is an elephant in the room at the state legislature, and it's definitely an elephant in the room for Bitcoiners. Are there real gains on this, or are all of these nominal? Are all of these returns nominal? It's almost like one of the few sort of traditional finance places that I feel like I always hear about inflation. And inflation is obviously a current term, but when inflation translated into real returns, in 2020, Oklahoma passed COLA adjustments, about 4% COLA adjustments for cost of living, which is that's what we should have. As things get more expensive, people out of these pension funds, they need more money, or else all that's happening is they're just getting diluted. What they were promised as they worked for decades as a teacher or as a judge or as any sort of public employee, they're just getting rug pulled slowly over time if you don't have COLA adjustments. These are things that we should want. But what happens? Your unfunded liabilities go up. So when in 2020, when we had made all this progress since 2011 in pension reform, then all of a sudden we implement COLAs and then our funding ratios start coming down again. What happens when the funding ratios start coming down? The state has to then fill in more of the gap. So you just have this really, sort of toxic cycle of where does the money come from? Who's going to actually get their payments? How long can this go on for? Everyone in my generation is sort of like already out on the idea that we're going to get Social Security because of this, a very, very similar dynamic.
And suddenly Bitcoin doesn't seem like this crazy, infeasible idea anymore.
Right.
You backtest its real returns. The narrative continues to emerge that it is in some way savings or some kind of long-term inflation hedge, even though narrowed to, just looking at a couple years window, it might not. On a long time horizon, it continues to demonstrate that this is true. And so I think I'm going to transition to the actual interesting tool that you built a couple weeks ago, which I think is like sometimes, it's really hard to like pull back, talk abstractly about this because, people are like, well, give me numbers, give me actionable things that we can do. And well, you and us on the Oklahoma Bitcoin Association are like, well, we could buy some Bitcoin and put it in the portfolio, but that didn't happen. So, how do we increase the chance? How do we put it in the hands and in front of these legislators to help them realize very tangibly what they're missing out on? And this is where you and I and some of us with the OBA bounced around an idea, which is, well, what if we track the opportunity cost of not buying Bitcoin. So you took it upon yourself to actually go build this a V1. What is the opportunity cost of not buying Bitcoin tracker that you built, and how do you think it could be used?
Yeah. First, all credit to Charlie for the idea on this.
I'm a great idea guy, but I'm not gonna build it.
Well, it was something that we've kicked around for a while. If they shoot this bill down and they don't buy Bitcoin, we our constant refrain internally was like, well, they're just going to come around and buy it, a year or two from now, and it's going to be 3 times the price, and they're going to have way less Bitcoin. So Charlie basically came up with the idea of like, well, what if we just quantify that? Light bulb moment, of course. Very, very good illustration to go into next session. So my team and I at Bubble, Charlie mentioned this at the start of the show. We're a podcast discovery platform. What business do we have building Bitcoin strategic reserves? Well, in the age of vibe coding, you can just vibe code things. So it is now living on our website.
I've got it pulled up here for the people who are watching it. I have a little preview. It's Bubble, bubbl.fm/SBR. You can see little overview of the United States, the highlighted states who have passed or not passed these strategic reserves. And then we have the chart. I think this is my favorite chart, Storm. Not chart. It's a table, just basically line by line. Oklahoma didn't buy Bitcoin. We could have allocated this much to it. How much would we be up or down at this point? And as of right now, every single state which didn't pass an SBR would be up millions, hypothetically.
Tens of millions. Yeah, so let's walk through the methodology here a little bit. And I put a disclaimer there at the bottom of the methodology, because like it's really, really hard to be perfectly accurate across every single state.
Yeah, as you just described, like each state is unique. You can't apply a giant filter to everything.
Exactly. So what's funny is that all of these numbers are probably pretty conservative. Because I was basically just taking like the 2 biggest pension funds from these states and then adding them in and say, okay, so the general methodology here is that when did the bill fail? What was the price of Bitcoin at the time? How big were the funds that were specifically mentioned in the legislation? And then at the top of the page, you'll see there's an allocation selector of 1, 5, and 10. Which corresponds to the various caps that we saw across those states. So you can switch that and you can actually get a better picture of what each state has now missed out on in terms of gains based on what percentage they would have allocated of those funds. So I like using the 1% because that was the lowest cap in all of them. Oklahoma's was as high as 5. But, take it as like a reasonable allocation. Okay, we could invest up to 5, but we only did 1%. Great. I think that's realistic. So then now it's a very basic calculation. We take the size of the fund. They had 1% of that fund they allocated to Bitcoin. Here is the price of Bitcoin at the time. And then now what would that be worth? So we're now sitting in the range of if Oklahoma had, it's been like a month?
I've got 5% allocation on here. Let's just say middle, not conservative. Let's just say we're Bitcoiners, so we like to play with the numbers a bit.
Yeah. So at a 5% allocation, Oklahoma is now looking at a $500 million opportunity cost already. That is crazy. That's like half of our state rainy day fund already. That is performance that's directly missed out on, especially for like our retirees, because our state legislators are protecting the residents of Oklahoma from what the governor of Arizona has called an unproven virtual currency investment, or whatever specific diction she used there. So, I mean, it's really the purpose of this tool. One, it's going to be fun to look at over the course of the next year. And we're going to continue to add to it. We're going to add comparison metrics with S&P and gold. If we can somehow find the time or like the good data sources, like we'll try to like put in performances for states. But again, they only release this stuff on annual reports. So it's not like you can have a live tracker of what the what the portfolios are doing.
It means you have to update it less, is what I hear.
Yes, that too. So yeah, we're going to continue to put things in there. It'll be really fun to track over time. And it'll also be like very important illustrative tools for advocates in all of the individual states. Say, hey, we failed to pass this last year, and this is what it cost us. Let's look at what the state made. And that would have been, for Oklahoma specifically, let's say we passed this last year when Bitcoin around this time last year was probably hovering around 50K. You make a 5% allocation to Bitcoin then, and now it's sitting at 105K. That's COLA adjustments. Straight up. That is cost of living for Oklahoma retirees adjustments just there. So this is like, on one hand, you know, I'm not as interested in like the bag pumping narrative. But I think stuff like Bitcoin's usage in the developing world and ways to use censorship resistant permissionless currency is still like by far and away the most important mission in Bitcoin. But you know, we also have like normal people who are basically having their savings and life work diluted away. And like, I really do, resonate with that particular mission of Bitcoin and even here in the developing world, because you know, me and you have had Bitcoin mining operations in rural Oklahoma, and we see it. Like, people are barely getting by, like in those parts of the country. So this matters, and I really hope that this is like becomes a powerful illustrative tool. And then one more thing, if you could pull that page back up, I just want to sort of show how we built this into Bubble and worked it into.
Yeah, this is really cool. Well, and I actually think this is a good transition to just talk generally about. We're going to switch gears a bit, but yeah, explain to me what we got here.
Yeah, so at Bubble, basically what we are is a podcast discovery platform. Podcasts are great. They're information dense. You have wonderful hosts like Charlie that spend time putting on good shows for you guys, and it's a great way as you're doing other stuff to satisfy your curiosity. But there's a total bottleneck on time. Typically, you can only invest an hour, maybe, you know, a couple hours. You know, there's the funny meme in the Bitcoin space about 40 hours per week of Bitcoin podcasting. But this is a great way of, you know, dipping your toes in, because what we do is we go find here specifically, we go find all of the podcast clips that are talking about Bitcoin strategic reserves. And we're doing semantic similarity search. We've built a processing pipeline where we actually then are using vector capabilities and semantic search to find out the actual content, not just descriptions or show titles, but the actual content clips where people are talking about Bitcoin. And we make this all discoverable so that you can pop in, hit play, listen to that 2 minutes, and then not have to invest an hour in a show that you maybe, you know, you're not sure about the host. You don't know if you want to listen to the whole thing. But it is this entirely new listening experience of I can actually get this sort of running clips so that I can then get exposure to a bunch of different takes from a bunch of different people all at once. And we can do this about anything. So, I mean, you can go on bubble.fm, and we are doing this for financial markets. We're doing it for Bitcoin, energy, your favorite sports team, in golf, Formula One, anything that you could possibly think of. We're doing this. So every week we're going and combing through all of the podcasts that cover these topics. And then we're breaking out the core narratives and delivering that to you in a digest. So you don't have to go out and try to find what you're interested in. It's gathering and curating all of that for you.
So this is a good transition, because I think we'll spend the last maybe 10 minutes chatting, riffing on this topic, which is a huge break from the first part on SBRs and how the state legislative process works.
Listener.
Scrap that. We're going to hard pivot to the fact that, Storm, you would not have described yourself as a dev even maybe 2 years ago.
No, 1 year ago, I would have told you I'm one of the most technically challenged people that I know.
And yet you and your team have basically built your platform through a process called vibe coding, or just, you might call it just coding, really with the assistance of AI. And that's how you built this SBR site. So that's the tie-in here. Let's riff briefly on AI and its tool and complement to the future of business models and products. What's vibe coding for anybody who hasn't been online for the past 6 months?
Yeah. So vibe coding is basically the process of which you open a development window, like just here, let's actually use like the most simple language for somebody who's never coded anything ever. And I apologize to any devs that are listening. They're going to scream at me that I'm being inaccurate. And to that, I say, I know. So you open, basically you're going to open a file that is some code, and it is just a dot, JS file, and it's going to have some lines in there, and you're going to have no idea what it says. And then you're going to have a window that's basically ChatGPT or some other model that is right there with you next to the file. You're going to highlight something, and you're going to say, what does this do? And then it's going to tell you. And then you're going to say, it's going to tell you something like, this is a button, and it makes the button blue. And you're going to respond back and say, I want the button to be green. And then the AI is going to think for a second. It's going to go, okay. And then it'll go into the file. Again, this is all just one view, and it'll make the change for you. At its most simple level, that is vibe coding. Instead of using the language of Python or JavaScript or any of these programming languages, you're going to code in English. And the AI is going to be the one that actually then translates what it thinks your desires are into actionable code. I think the skill that a lot of people are realizing here is it is very easy, especially as code bases get more complex, for the AI to misunderstand you. And there's also just like natural variance in the output of these AI models. Sometimes they're really good, and then sometimes they will hone in on one little thing that you said in your prompt that you thought you were clear about, and then it does something completely different. And then if you're not auditing as you go, you're going to sit there and chase your tail for hours and never actually get anything done. So what's cool, I think, is that you're really moving into this area where people who previously could not build anything are now able to build something and actually get it working. There's all sorts of pitfalls that come along with vibe coding. But now you're to the point where if you can clearly articulate an idea and you're willing to sit there and iterate with this completely autistic alien intelligence that is AI, you can sit there and iterate and make things that work and are fun and cool. And if you do it enough, you're going to realize you're actually going to learn a lot about software architecture, software engineering, and how it works. I've been working on Bubble now for about 8 months, and it is, I've learned more in that 8 months, and I'm actually I feel competent enough to actually go out with an idea, and I know the architectural decisions in my head before talking to the AI. Like, I need to be able to think about how we're mapping out this type of data, how it's going to interface between these different files, and so on and so forth, to the point where, I can actually bring something to life in a UI, deploy it properly, think about things like rate limiting, and all this kind of stuff. And it's really, really cool. I think it's one of the coolest things happening in tech right now is that people can get on, start talking to an AI, and just build Pong. But oh my gosh, this is so cool! I can run this myself. I'm learning how to use these tools, and I think it's just really a tremendously positive and encouraging thing that's happening as far as the democratization of access to software.
Now, this could bring, as you say, a lot of risks and pitfalls, and a lot of creative destruction of capital and skill sets. But at the same time, like, in aggregate, we are becoming much more productive. I think this may lead into an interesting, I invite you to reflect on how this may change, like, business models going forwards. Feel free to be as ebullient and optimistic or pessimistic as you wish. And then, does this tie into Bitcoin at all? Is my kind of last question.
The AIs are going to buy Bitcoin. Yeah.
They're going to, well, I actually kind of like, there's this idea that they might like transact in Bitcoin. This makes a lot
for
of,
sure.
Yeah. Actually, what does that mean actually for the listener?
Well, I mean, I think what you're going to see is you're going to have the AIs, the AIs aren't going to have like own Bitcoin. Like that's not what they're going to do. They're going to basically manage wallets on behalf of humans, that are using those AIs to basically like transact with one another. It could look in the sense of where, think about like API credits almost. Like you're just preloading an AI with a budget that it can use for API credits. And then it will be able to allocate those funds as needed, where it's like, okay, I need this amount of data from this location, this amount of data from this location, and this is how I can think about spending that budget that's been allocated towards me. It's still your money, and it's still the business's money, but you're just giving the AI autonomy to make decisions on what it's going to be spending. And you can, of course, you can hard program limits and caps and all of these things in there. But what's going to be cool is I think you're going to see a significant amount of transaction volume being done on an automated basis by basically AIs that are plugging into different API, MCP protocols. And I think you're going to see a pretty high automated transaction flow here over the next couple of years.
How does this change the future of business? This is the big question, and we can probably wrap just reflecting on this and leave the nuggets for the listener.
Yeah. So as far as business models go, it's really interesting, and it totally depends on the scale. Let's start with like big corporations, like big tech. You're already seeing it. There are now graphics that are being shared on LinkedIn and Twitter. They're just basically like Salesforce minus 20%. Google fired 1,000 engineers. Microsoft, I think, was the most recent one. People are firing engineers. The great irony is that the first people who are getting laid off almost because of these productivity gains in AI are the software engineers, which is, I would not have guessed that a few years ago. But it seems clear now. I mean, it's just what the models are best at. So I think like the job and labor market in big tech, I think is going to stay pretty stagnant for the foreseeable future. I don't see really any big tailwinds that would lead the big tech companies to all of a sudden go on hiring sprees in the age of AI. So I think as far as businesses go, you can probably anticipate to see a lot of these big tech companies and like a lot of these bigger corporate publicly traded mega companies continue to cut technical staff, and then slowly, I believe, administration staff as well. For startups, there's now basically like no excuse to have a non-technical founder. I think if you're going to start a company now and you're going to have anything to do with software, every single person on your team at least needs to be vibe coding. There's no excuse not to at least, put on the hat of a junior dev when you have Cursor and Claude that can work with you. Doesn't mean you don't need to define your own internal safeguards, your own internal engineering hierarchy, your own workflows of how all of that's going to need to go in like a safe and efficient manner. But it does mean that this is definitely a workflow that needs to be and will be expected, especially I bet from venture capital as well. It's like, why do you have this person who's not working on development as well? Unless you've grown to the point where people are able to specialize a little bit more. Early stage, man, everyone's got to be building. And it's for anyone that's built a company out there. There are all those funny memes, like especially out of like it's like the duck chasing the guy. It's like, hey, what if you started a business?
Oh yeah,
MBA going to an engineer. It's like, you can build the product. I'll handle the business side. And it's like, now that you see, especially in my position, how funny that is, because like how much more work it is to get a product like fully functioning than quote unquote handling the business side is crazy. So I think it's like, that's really going to change the nature of building a startup. And the size of teams and the way early funding gets allocated. And then I think another really interesting one is like legacy boomer businesses. Probably one of the most interesting opportunities in AI development right now is buying up these like moderately successful regional like services companies, like an electrician or a plumber or a roofing company or a driveway payment. And then how can you just like supercharge your distribution using AI, like either like custom AI tools or anything? How can you just like hop into that sphere and just totally outcompete everyone by leveraging AI? I think that is probably one of like the sexiest market opportunities that exist right now, because those are going to be some of the slowest places that actually adopt and implement these types of tools. So I think that's going to be something that's really interesting to watch. And then, you have like Charlie and I are from Oklahoma, so you have a whole lot of oil and gas companies that, don't have a website or have like a website that was made in the 2000s and they just like print money, but have never really done anything on the tech side. I think those are really interesting type of business opportunity, and they exist in every industry, where you just have like some very niche, boring product or service that you do, but you just dominate that field. I think there are totally optimizations and really, really interesting applications that you can, if somebody who has the know-how and wants to put in the elbow grease, can really go in there and really make those businesses a lot more efficient.
Well, there you have it, ladies and gentlemen. Storm, quite a Renaissance man, talking about high level how the actual state strategic Bitcoin reserves work and the obscurities of our legislative process, to vibe coding. I do think that these kind of do barbell some of the most important conversations going on right now in these United States. Storm, thank you so much for coming on Bitcoin Season 2, and I'm excited to have you back again sometime.
Thank you so much, Charlie. Happy to be on here.